Morning, guys. Welcome to the weekly show. I'm glad for you guys who are tuning in. We appreciate you. It's a lovely Saturday morning, and we're gonna go ahead and dive into some prayer here to open up. So, Father God, we just praise you for this day, praise you for this time. Thank you for some sunshine, and we just thank you for this space that we're able to come together, chat about some stuff, and dive deeper into a unique perspective of your word and what it says, and also how we handle and manage finances that you bless us with, and how we can use that to build your kingdom. So, just speak life over anybody that tunes in today, that you would give them a fresh perspective on where they're at, where they're headed, and what they're going towards, Father. And we just praise you and thank you in your name, Jesus. Amen. So, pretty fun week. Although I will say Naftali is with his wife today on Mother's Day, so he probably will not be joining us. He said he might pop in later. So it's been a pretty fun week, and just a reminder, nothing on the show is financial advice, but we'll go ahead and dive into it. So, crypto markets this week have been doing remarkably well. I just checked the prices. Bitcoin's hovering around 104K, which is pretty great. Its all-time high is about 109 from a few months ago. So we are seeing a really nice recovery in those prices, and looks like all the other coins down the list, everything from Ethereum to Solana to XRP, they're all looking pretty green as well. And I think that one of the most interesting things that I've noticed during all this is there's a chart that's out there that Raw Paul kind of hyped up a lot, but it's called the Bitcoin overlaid on what's called the M2 money supply chart. And the M2 money supply chart is basically just a metric of the dollars entering into circulation. It's actually a global level, so you're looking at global currency, and whenever that line shoots up, it means that the world is printing money, which is basically the way that modern governments, modern countries pay for things. Instead of doing things the right way, they just print money out of thin air, as opposed to saving money to buy stuff like we're taught to. So. But obviously, as the government prints more money, there's more money in the system. That means that, unless the supply of stuff that you're buying increases greatly, the price of everything essentially ends up going up. And so, if you look at houses, for example, let's say you're in a community where there's 1,000 houses, and let's say they're all identical. And, if there's 1,000 houses, and there is 10,000, we'll call it dollars, in the community, and everybody wants a house, and there's 100 houses for sale, if they're all identical, the price of each house is going to be, it's going to end up being $100, because, there's that much money chasing that many goods. And so that's kind of how the price gets determined. Now, if you double the amount of money in the community to, double that. So, let's say you have $20,000 in the same community. What you begin to see is the home prices will essentially double, assuming there's nothing else that people want to buy. And so that's kind of the most basic understanding, because now there's $20,000 chasing the same number of houses, 1,000 houses. If the number of houses doubled, so if they build 1,000 more houses, and now there's $20,000, each house will maintain its value of $1,000, or I can't remember what I said. $10, sorry. But yeah, so that's kind of a zoomed out perspective, and so that's a basic understanding of supply versus demand. And so the reason why you've seen house prices, and even like rent prices, at least in our area particularly, and I believe around the country, the reason why you are seeing these prices of things continue to go up is because, for starters, houses are not necessarily cheap to build, and there's a lot of headache involved in building it. You have to obviously get the permits and all that stuff. So, to build a house takes a lot of energy, a lot of effort, a lot of materials, and it's a big investment. And so, if you're going to invest your money in building a house, you better make sure that somebody's going to buy it. And what gets super interesting though is in Pennsylvania where we live. The average home price is still 100 and give it $80,000-$90,000 median priced home. So there's only so many houses that have been built, meaning that I would say most houses in our area are occupied, they're owned. And so if there's no more houses being built in let's just say our area, for example, or county, and once again, the average price of an existing home is $190,000. The average price of the average median new home cost is around $400,000. That's what it would cost to build a new home. So, if you're looking to buy a house in our lovely place in Pennsylvania, you could either buy an existing home remodeled for around $200,000, or you could build an equivalent home that's brand new for twice as much money at $400,000. And so I think most people obviously will take the first option because it's cheaper, and even though the house is older, if you're spending half as much, you now have a lot more money to go do other things. So there's a strong argument as to why people wouldn't build houses if there is a developer that came into town and started building houses because he noticed there's a shortage. They're going to see that obviously there's not many people that are willing to pay twice as much as an existing house costs. And so so here's the dilemma. As the government, as the world prints more money, there's more dollars fetching, like I said in this example, a scarce number of houses pre-existing or land. You can't print land. And so my thesis is that as this happens in markets like the Northeast, and there's lots of charts and diagrams to kind of back this up, I don't believe that you're going to see a correction in housing prices because it just doesn't make sense. So there's still enough people that are looking to buy a house, and the truth is that if house prices went down, but the government's printing more money, then it would essentially indicate that people are going to have more money and they're going to be spending less for something that's not able to get rebuilt. So as the government prints more money, there's more money in the system or in the economy. So ideally, everybody should have more. That's not how it works. Typically, when money's printed, it winds up heading upward to the pockets of the rich because they own most of the houses. They own the gold. They own the Bitcoin. They own the scarce things that you can't print. And so, all this to say that since the world is printing more money, I would expect, and this is not financial advice, but I would expect the price of Bitcoin and other cryptocurrencies for that matter to continue to accelerate in their appreciation. They'll probably follow the graph pretty close, which indicates that we're probably going to see a rip in Bitcoin to somewhere in the ballpark of $130,000 in the near future. And as that happens, I would expect the other, what you call altcoins, to also have some appreciation. Maybe not as intense, but I would anticipate that some of them are going to do really well. And, I just looked at the charts before we hopped on, and, a lot of the altcoins they've been flat over the last handful of months, but, you need to kind of realize, if you look at it through that perspective, over the last 3 months, it's actually down. It might be true, but if you're bullish on an asset like that, one of the biggest mistakes you can make is buying towards the all-time high or towards a high in the cycle, and then as the price drops 40 to 50%, like we saw this last cycle, most people just sit on the sidelines. They don't do anything, and they think that they made a horrible investment. And then, now the market comes roaring back, and you're close to breaking even. And so the reality is if you would just dollar cost average, which means that you're buying every single week or other week in your paycheck, as opposed to just throwing money at something all at once. You'd be in the green significant, because looking at some of these charts here. Let me just get this pulled back up here. One altcoin that I particularly enjoy is Polkadot, and I like it because I think that it does have some intrinsic value as far as utility, but I also think that it has a fantastic yield for staking, which basically means that if you lock your coins up to support the network, it'll pay you interest on your coins, and the interest rate's been close to 10% for a long time now. But looking at the chart here, zooming out in the last month, Polkadot was at a low of around $3.50. This was back around January. I think, yeah, this is a 1 month chart actually. So literally a month ago it was at $3.50. If you zoom all the way back to, so got down to around 3.30, and that was back in April. Yeah, about a month ago. It bottomed out a month ago. So if you were dollar cost averaging, you could have bought some Polkadot at around $3.50. It's currently up to over $5. So that's a nice over 30%, I believe. Yeah, you'd be up over 30% on your purchase, and you'd also be earning some yield. And so you probably have an extra 1% on top of that too for stake yield. But I've been holding a bunch of these coins for years, and it's kind of crazy how it snowballs and blows up just by holding coins, allowing them to grow and compound interest for yielding. It's kind of crazy. And so I really like Polkadot. I also really like Solana because, once again, it's a similar scenario. And if we look at the chart for Solana, just zooming out to about a month ago, if you were dollar cost averaging in Solana, you could have picked some up for just over $100, about $110 is what it looked like the price was on exactly a month ago on April 10th. And so if you would have bought Solana on April 10th at $109, it's now at $171. And so that's what, $60. So you're looking at around a 50-ish% gain in just a month. And Solana pays a yield of in the ballpark of, I'd say, 6 to 7% APR. So in my case, I bought Solana around 2 years ago, made not even a big bet. The price dropped so significantly that I made a fairly small bet that turned into a very large, massive bet. And the coins have been staking for, I'd say, close to 2 years now, maybe a year and 3/4. But, as a young person, what you need to realize is that if you buy some of these tokens in what I would consider the dip, and so for Solana, really, if you just zoom out of the chart, maybe look at, there's a thing called what's called moving day averages. And so depending on which one you like, there's typically a 200-day moving average, there's a 50-day moving average. And that's just basically a line on the chart that shows you what the average price has been over the last 50 days and what the average price has been over the last 200 days. And you can follow that line. Typically, if you're new to investing, if you try and buy below, honestly, both of those lines, it's probably a decent price, especially if it's something that you believe has long-term utility and is going to do well. Let me see if I can... Sorry, indicators. Okay, yeah, so the website I'm on is a little too sophisticated. I've never actually used it, but it's just good for easy stuff. But yeah, so if you're holding Solana, though, for, let's say, 2 years, so zooming out from around October 2022, maybe November. So yeah, November 2022, which is actually when I bought. The price was $16, and it stayed low. A year, so about 10 months. We're looking at September 2023. the price was still about $18, $19. So, if you were bullish on Solana back in the day and you were dollar cost averaging into this coin, you would have had 10 months to do it. And every single coin that you bought would have been earning about 7% yield. So, for example, if you would have bought 100 coins at $15, that was only $150, and those 100 coins would have earned in 1 year probably about 7 additional coins. And at today's value of just 1 year of interest on the staking, so you take 7 times 170, and you get your answer. I'm not that good at math, but you're in the ballpark of over $1,000, and so what I'm trying to say is your measly investment of $150. The interest on the coins itself, not the actual money gain, but the interest on the stake yield would be, you're looking at around $1,000 on a $150 investment. That's like a what, 7x? I think that's around a 7x return on your investment just in compound interest on the stake yield in 1 year, and that was 2 years ago. So you would have been able to basically double that and then some. So this is kind of what I've been trying to tell people. Like, cryptocurrency is I would say the greatest opportunity for young people to basically get to $100,000 net worth, because I feel like once you hit 100K, the snowball really starts to roll. And there's been some incredible opportunities in crypto. Most people have ignored them because they're too scared or they don't understand the underlying asset. But if you dive deep, if you do the work, you can do really well. And there are multi-millionaires, possibly billionaires, who went big and bet big on Solana because they did the extra hard work, and they said, okay, this coin is way undervalued, like it's over. There's an overreaction in the sell-off, and so they bought hundreds of millions of dollars worth. So you imagine where they're at now, and that's kind of an underlying reality of the rich getting richer and the poor getting poorer. When these people get enough wealth, they can buy these crypto assets, which are going up in multiples, and they're earning compound interest on staking possibly. So, if you have $10 million and you throw $5 million into the Solana back then, and the return is 30x, all of a sudden you're sitting on $300 million, so, or something like that. And that's, I think, how a lot of people are, they're getting extra rich. And, you have the same opportunity here. It's just a lot smaller scale. So if you only have $100 to throw at it, well, throw it at it. I had a friend who called me earlier this week, I believe it was, and he ended up buying some Bitcoin for the first time. I guess he heard somebody encourage him to do it, and so he did it. And then he ended up selling it pretty shortly after at a slight loss because the price went down a couple percent. And if he would have held, he would have been pretty nicely in the green. I think the price was probably around 96, 95. So it's at 104 right now. So would have been up around 10%. But all that to say, a lot of people allow fear to basically get in. And whenever you're new at investing and you're investing in crypto, it is one of the hardest things to hold because it is extremely volatile. And if you're not used to seeing digital losses, in other words, like paper losses, I guess you would call it. So if you put $1,000 in and you check a couple hours later and you lost $20, a lot of people would get scared and they would say, well, I'm going to lose everything. I better pull out now. Even though it's entirely irrational to think that way because obviously the price of Bitcoin fluctuates insane. And so what I encourage people who are new to the space is to throw small bits of money at it and get used to watching the volatility. So if $100 is small, throw that at it. If it's $20, put in Robinhood and throw it in and just get used to watching it go up and down. And so try and get a stomach for watching watching the value of your portfolio go up and down significantly in short amounts of time. And I would say, honestly, the upside, eventually you'll notice that the upside is a lot better than the downside. I mean, it's not very fun if your portfolio drops 10% in a day, but if you're mentally strong and you think, well, this is just temporary, eventually it's going to go back up because you believe in the asset that you're buying. That's where you need to get to. You need to be mentally strong, because if you're not, this space will crush you, and the rich people will, they'll take all the money and keep getting richer. Think of somebody in their shoes. If you have $100 million in crypto and the market drops 20%, those people are losing $20 million. And so if you think your $20 loss is significant, think of these people who lost, an insurmountable amount of money to us to comprehend. $20 million, life-changing for anybody, for generations. They might lose that in a day, and they might be completely unfazed because they know if they just sit back in a couple months, that money will all come back with additional with additional funds. So it's a really strong mental game, and I keep trying to say this, but I really think that crypto and Bitcoin in particular is a multi-generational opportunity, and you guys need to really dive in, study this stuff relentlessly, understand why it's going to change the world. And once you do that, I think you'll be comfortable buying some. And don't miss this opportunity. I can say personally, it's changed my life. It's built a ton of wealth, and I believe that we're definitely not done yet. I think there's a lot of space to grow, and there's a lot of room to ride this train still. So all that to say, watch the world as they continue to print money. That money is going to find itself into Bitcoin, pumping up the price. And I remember back around 10K, 20K, people talking about 100K seemed like a really far fetch, and so you had the opportunity to buy Bitcoin at 15K. And for me mentally, like 100K was a really long shot, but here we are today. And so at $3,000, people thought that, $30,000 was a long shot. Yet we blew past that. So, looking today, what's the next goal? Probably $250,000. And I think that, we might get there quicker than people realize, just because a lot has changed in the space. And I think the governments they're printing a lot of money. The United States is printing more money, which is not necessarily good. Or it's not good, sorry. And Congress is having a hard time passing a bunch of these budget cuts that Doge is trying to push through. But there was an interesting dilemma. This budget got shut down. That was Trump's budget for next year. Unfortunately, it actually rose the deficit. He cut a ton of spending, but it's still adding money to the debt. And then yesterday he came out and proposed an extra $150 billion for the military, which to me is obnoxious. But that's the direction we're heading. And so I think that a lot of people were expecting the government to kind of get their act together and start cutting spending, but we're still printing money. We're still going further into debt. And so we threw the best people we had at it, Elon Musk, they did their best, and the best they could get is adding to the deficit. So that doesn't tell you that we're on an endless cycle until we destruct. I don't know what else will. If you have hope in the U.S. dollar, I think you're crazy. And if you're not investing in either silver, gold, Bitcoin, real estate, something that's scarce, I think you're crazy. If you're holding cash, I think you're going to get wiped out pretty hard over the next handful of years. But a lot of people are blind to Trump, and I'm not even necessarily against Trump. I think he's doing a lot of good things. I think these tariffs are good and much needed. But you have to realize that Trump can't fix everything, and a lot of people think that he can. Sometimes you have to be a realist and still make the best financial decisions, regardless of how your emotions are. And I hope the best for America, but all the indicators are saying that we're going down the wrong path still, which means that crypto in the long haul will continue to accelerate, in my opinion, because, like I explained at the beginning of the show, there's more money entering the economy, and when there's more money fetching an amount of goods or scarce desirable goods that are not increasing fast enough, the value has to go up to account for that. So yeah, that was kind of the whole spiel there. Looks like Naftali's here. I think he said he's just listening, but I'll send you a co-host if you have any thoughts to add to this, brother. Love to hear your input. If not, no worries. What else do I have here? Yeah, so that was pretty much, I think, the main premises of the show here. Let's go ahead back and look at some of these charts, and I'll just give you guys some inputs on if there's anything that I think is a pretty good price right now. I will say I own a lot of SUI, SUI. It's all the way up to number 11 on the market, which is pretty high, honestly. And yeah, SUI dropped to, I want to say $2. It got sub $2 in the last month, and now it's up to $4. So you could have doubled your money on that one. I bought SUI too early, so in true regards, I'm still down on my position, but I'm still definitely long-term bullish. I think that it's probably going to continue to rally, and I think its high was maybe $5.50. So that could be a good option to buy right now. I think it's fairly cheap. Chainlink's in the same boat. If you look at the chart for Chainlink, zooming out to a year, its yearly high was $29. It's currently at $16. So I think there's a lot of opportunity there. It actually has an all-time high of $50. So I haven't dove deep in the fundamentals of Chainlink, so I'd recommend doing that first. But I know a lot of people seem to like it, so I do own some, and it seems to still be relatively cheap. So that could be another good option. Avalanche, which I think I own some. I think I have a sell order on Avalanche for $25 maybe. And it looks like we might hit that today. So I might be able to make a little bit of money there. Some of these cryptos I kind of day trade, so I'll buy them when I think the price is low, and then I will set a sell price, and when it hits the price, it'll sell. Typically aim for ballpark of 20 to 30% profit. Sometimes I get them in a week or two or a couple days. Sometimes it takes months. But typically it winds up executing. Polkadot, we talked about that a little bit. $5 I feel like is a little on the upper side. It definitely has done well the last month, but all that to say, December last year it was trading around $11, currently at $5, and you do earn about 10% interest yield on that one, so could be a good one to buy. I personally probably wouldn't at the price, but it's also, I would say, a pretty good price at $5. But yeah, that's pretty much the ones that I would be looking at right now. At least that's what I am looking at. Ethereum's a tricky one. It's at $2,400, which honestly is, many would say cheap. I'm not sure what I feel about Ethereum. Possibly it could still do well. It has just been such a radical underperformer that I've been trying to sell off when the price goes high, and that tends to do well. XRP once again, or XLM, two different coins, similar ideas. I know a lot of people who have been betting big on those, and I personally, at these prices, would probably stay away from at least XRP, maybe XLM. I would be a buyer there. At 30 cents, I think $2.40 for XRP. It is a fairly large market cap, and I think that, I kind of like to go for some of the smaller market caps because they can multiply much quicker, much easier than the ones with a bigger market cap. And the reason why, if you have a coin with $100 billion behind it and a coin with $10 billion, if coin B gets $10 billion in inflows, the price doubles. Whereas if you want to double the coin that has $100 billion in it, You have to add $100 billion, which is obviously a bit harder than adding $10 billion to a smaller one. So market cap size is interesting. If you're looking to multiply your money, smaller market caps give you a better chance. But yeah, so that was kind of more of a crypto rundown and a slight description of why the government printing money is is concerning and why it makes me bullish for Bitcoin in particular, but also crypto. So, keep your eyes on that stuff. Keep your eye on the U.S. budget. I think that what's going to happen is they're going to bring a new budget to the table, and I think it's going to add a lot more deficit than this one that they're not voting on or possibly declining. I'm not sure, but there is a bunch of crazy stuff going on. And I think that, Trump is saying a lot that he's cutting costs, and he is, but at the same time, the budgets are going to run up the deficit. So we are going to go deeper into debt, which means we're going to print more money, which means that, once again, I would expect the price of Bitcoin to rise. I would expect the price of real estate to continue rising. And I don't see that ever stopping, honestly. I don't think, at least in our area, the Pacific Northeast, I just saw a chart this week that shows that we are still 50% or more lower list. So we're less than half of the listings still that we had prior to COVID in 2019. And so the Pacific Northeast is hot. I mean, hot. There's not much supply. And once again, like I said, people are not building houses because, the price to build is, in some areas, double the price of buying existing remodel. And it just doesn't make sense. So as long as you can still buy a remodeled house for $200,000, unless the price of a new house drops off a cliff significantly, you're not going to see price reduction, guys. I don't think it's going to happen unless people get foreclosed on. But if you own a remodeled house and you have it listed for $200,000 and there is no other inventory, it makes no sense for you to reduce your house to try and sell it unless you're desperate, which I don't think many people are, because people have to move and they have to, they're going to pay more for a house at a higher mortgage. So, unless mortgage rates drop off a cliff, which I think they might, and if mortgage rates go down, people are going to actually spend more money for houses because they'll be able to afford more. Their monthly payment will be less. It's just like buying a car. Nobody cares about the dollar amount on the car. They care about the monthly payment. And so if their monthly payment goes down, they'll actually pay more for a house. And so I don't see interest rates going higher. I think we're peaked. And eventually they'll probably come lower. And when they do, I think real estate continues to appreciate in the Northeast and in areas like the South where it's unaffordable, or the average house is probably $400,000. People are just going to start moving to cheaper areas. It's just the reality. And the only reason that people are building new houses in the South is because the price of an existing home ended up getting more expensive than the price to build a new home, which should not happen. It's crazy. And so now the markets are adjusting. But the only reason why the South is, quote, crashing, that people would say, is because it just got so hot, and the common sense was in reverse, And so once again, you look at their market, the average home price is over $400,000, meaning that you could build a new house for probably the same price or cheaper. So builders build a lot of houses, but they found out that not as many people can afford them as they thought, and so now builders are probably taking losses. But we're not going to have that problem in the Northeast because builders are not building houses. There's a fixed number of houses, and the only way that you're able to buy a house is if somebody buys an old not collapsing, but an old distressed house and flips it, and they're going to sell it. And if you're a flipper, you're not going to sell it for, if the going rate in the market for a remodeled house is $200,000, you're not going to flip one and sell it for $150, even if you only have $100,000 in it. You're going to try and get $200,000 because you know that there's no other option. So, and quite frankly, I would do the same thing unless I knew somebody I could sell it to. If I had $100,000 in a house and I knew it was worth $200,000 because that's what people have paid for similar houses, I'm gonna list it for $200,000 and I am not gonna budge except for maybe a little bit. But there's no way I go down to 150K unless I need the money like ASAP. And so that's the predicament we're in. So expect real estate to continue to either hold steady or appreciate. Expect Bitcoin to continue going up following that M2 chart. I think that we're in for a couple fun weeks here. Bitcoin's holding strong after its rally, and the altcoins are going crazy. This is probably a fun little cycle in the fun part of crypto. It's called the banana zone, and it's when price appreciation gets crazy. So I will say, if you're new to this, try to avoid letting your emotions dictate and just buying stuff because it looks like it's going to go up forever. You can get screwed. Look at the all-time highs. Try and look at charts a little bit. Like I said, use that 50-day and 200-day moving average. If it looks like it's significantly above that, I would not recommend buying. Try and buy below that line. But yeah, that's kind of my input for crypto. I think we're heading into a fun cycle. Naftali, I will leave it up to you if you want to add anything to what I just said. I know you're kind of on the road, but not your co-host. If you have any comments on crypto or real estate, love to hear you. Afterwards, we'll probably close up for the day.
Well, I came on to pretty much double down on what you said about pretty much go look at the stats, go look at the charts. So this is not financial advice, but it's probably some of your best personal advice. So don't necessarily listen to us or listen to what the traditional market analysts have predicted, because they've been trapped in the cycle for 20, 30 years. And they're going to tell you how the market has looked for the last 20 to 30 years. And they're not going to give you the best advice because they don't understand what's happening with the real estate market or the crypto world. So I would take Ryan's advice, and that was probably one of the best education classes I've heard on crypto today. Ridiculously well, Ryan. And so that's my personal advice, is listen to Ryan, but my advisory is go do your own research and double down what he said. Go look at the charts, go look at the stats, go look at what's happened in the last 2 to 3 years, and then look at the people who are extra wealthy and where they're putting their money. And there's only 2 places, crypto and real estate. So I really appreciate your advice. And what he said about this, one more thing about the South is, I live in the Johnstown greater area and the Somerset greater area. And I would say this, I see so many Texas license plates in Pennsylvania right now, so many West Virginia, Johnstown has, I feel like, doubled. Like, I can go at 9 o'clock in the morning to Walmart or 8 o'clock in the morning, and it's hard to find parking in Johnstown. Now, Somerset is not as bad yet, but I think it's going to. I remember meeting this guy in Somerset last year at the Walmart, and he was from Texas, and he was Italian. Him and his wife were from Italy, and they came all the way from Texas to Pennsylvania to Somerset County to find a job because they wanted to move down here. And that was a year ago. Now, I'm seeing all these construction trucks from Texas. Now, Texas is known for work, and what I think is happening is work is actually slowing down in the South, and there's more work up northeast. I have a family member who's looking at coming up to Virginia, West Virginia, even the Northeast. I think the South, the people from the South are moving a little bit more north. They're moving to Georgia, and that's already expensive. And then it keep on creeping up Northeast because there's a shortage of homes, and it's more affordable. Even though there's a shortage of homes, it's still more affordable. So that's the last thing to double down on what Ryan said. Get your education, look at stats, look at the numbers. Again, I said, don't necessarily believe us or believe your advisories, but do the research. And I do agree with Ryan, probably the best class I've heard. That's it.
Yeah, man. Thanks, brother. Appreciate that. Good input as always. And yeah, I think if I had to make a prediction for the next 5 years, I think that we're going to see. I think Pittsburgh is going to be possibly the number one city for young people to migrate to. And I think there's going to be a lot of job growth. I talk to a lot of people who are young, who are moving to Pittsburgh, who are smart. These aren't your typical workers, but they're like, doctors, lawyers, smart educators, college professors, and everybody loves it. Like people that move here, they love it here. And the cost is, I mean, you're talking dirt cheap. And so if you have some money, if you're interested in moving, like I told my friend, he's talking about moving to Pittsburgh, like there's some really nice houses for sale that have been remodeled that are like historical. And so they restored all of this super nice, like interior woodwork and basically stuff that you can't even reproduce today because it's a piece of history, and it's absolutely gorgeous. And so I think if you're young and you could buy that house for 200 grand. It's literally like one of it's like a trending video on Instagram. These people are like, oh, look what you could buy for 200K in Pittsburgh. And it's like, holy smokes. Like, it's, and if I follow a page on Instagram about these crazy Zillow places for sale, and like the people that are, running the page, they always make the comment that Pennsylvania has the most unique homes, which I think is really fascinating. And they're all super cheap still. So, if you're a young person, if you're maybe living in Texas, I actually saw another stat for Dallas, Texas. The average, I think, I can't remember if it's the average or what, but there's a lot of people who, once they add their mortgage payment, their property taxes, and one other payment, I can't remember what it is. I don't think it's HOA, because I think it excludes HOA. But anyway, once you add those things together, they said that they are paying 10% of their home value per year. Once you add up their payments, 10% per year of their home value, and they probably have a 30-year mortgage. So over the course of 30 years, they're going to pay triple of what their home's worth. And so those numbers are just crazy broken. I think people are just they're currently making too much money to realize that they're making bad decisions. And these same people, like, they're going to have the opportunity to work from home, and they're going to go to Pennsylvania, and they're going to say, holy smokes, I can literally buy like a castle for the same price that my house is worth down here. So, I have a lot of friends that think the real estate market's going to crash locally. I think you're very wrong. They've been saying this for years, and the price since then has gone up like 30-40%. They thought it was inflated, when the prices were, like I said, way cheaper than today, and you could get a lot more back then. But, people, you need to use your common sense. Look at how much it costs to build a new house, and the reality is, if you're paying 200 grand for a house that would cost you $400,000-$500,000 to build, I would say you're getting a good deal, because there's not an infinite amount of those houses, and you can't reproduce them for that cheap. So, but once again, my prediction for the next 5 years, I think we're going to continue to see prices go up locally. I think that young people are priced out. I think if you don't own a home right now, there's a good chance that you're never going to. I mean, I hate to say it, and it's kind of heartbreaking, but unless you can find a new job that pays you significantly more to where you can afford a house today, or if you can afford a decent house today, you might want to just consider buying it, because I don't see a scenario where people stop moving here from areas like California and Texas and Florida if prices stay this cheap. And so I think this migration continues, and, we live in a very beautiful area. There's a lot of scenic things, and people are going to come, and they're going to bring their businesses. They're going to bring their wealth. They're going to bring their families. And so be ready for it. From a ministry perspective, it's great. We'll get to minister to a new group of people. But if you're trying to buy a home, if you're renting, I would be cautious, because I think rent's going to continue to creep up rapidly as well. And, I think it's a good time, if you can afford to buy a house, you might want to just consider doing it. There's a handful of houses on there, just put a decent offer. If it's listed for 200, offer them 175. And if you can get that house for 175, I think you're going to do pretty good, as long as you're planning to stay in the area long term, because I don't see much of a scenario where our home prices go any lower. Honestly, I think they're only going to go up, and Trump is known for borrowing money, and he's going to borrow more money. So that's kind of the end of the story. But watch my video on real estate on YouTube. I talk about how if you save in gold or Bitcoin, you're able to afford a house much quicker than if you save cash. So if you're out there trying to save up for a down payment, you might be fighting yourself. Put that money to work in Bitcoin or gold, and you'd probably be able to afford a house much quicker than trying to save cash and trying to beat the appreciation of home prices. So, but anyway, good show. Naftali, appreciate you, brother, and happy Mother's Day to any mothers out there. We appreciate you, and hope everybody has a great week. We'll chat with you all later.